Crypto champion Arifa Khan and ask her if the banks have it right about digital currencies and their future.
The banks have a knee-jerk reaction to blockchain. Sorry, Jamie Dimon.
And on a wild ride, as we all know, in the past few days, but the volatility in Bitcoin value makes those fluctuations look a little silly. Bitcoin was pushing $20,000 in December. In the past few days, it dropped from $10,000 to $6,000. Today, it bounced between $7,700 and $8,500. This rebound happened despite sat down with the crypto champion, Arifa Khan. She's quite something. I first asked her about the blockchain.
Thank you very much, Bart and Boomburst, for having me here at Davos. The first part of the question, there are various phases to blockchain, which actually skips the comprehension of people. First is the enterprise blockchain, which most corporates are trying to incorporate in their business cycles to improve their profitability, their bottom line, and their business models. But that's just a very small fraction of the potential of blockchain. The second part is what governments can do with blockchain. So, for example, digitizing every sort of records, education records, land records, medical records, public data. That has a very big impact. And when you combine it with an awareness of where the technology is headed and its impact for your youth, for your technology, for the skilled jobs of tomorrow, that has a tremendous implication for governments as to how they can shape the future of their youth. That is the second one. But the ultimate potential of blockchain, I believe, is in decentralized marketplaces and decentralized exchanges and decentralized platforms. And that aspect is still hard for a lot of people to grasp, including the policymakers, the governments, and the corporates. Of course, you wouldn't expect the corporates to get this aspect of blockchain because it's beyond their scope. They're completely focused on their own profitability, so they ought not to be thinking about this. But the ultimate benefit to the common man and to the public, the gift of Satoshi Nakamoto, if you will, is in this decentralization. And that will only be achieved by a new generation of entrepreneurs, new generation of innovators and disruptors who are expected to come out outside of the incumbents, outside of the existing institutions. Once they come and build these applications, build these marketplaces and platforms, that is when the true potential of blockchain will be unlocked.
And which are the sectors that are most adaptable, that will be adopting blockchain first?
I would say that manufacturing has a lot of implication, especially in supply chain logistics, movement of goods, tracking of fraudulent goods, authenticity, and also linking the movement of goods with finance, invoice financing and those kind of things. So manufacturing has a lot of potential, especially where authentication of goods is important. For example, in pharmaceutical industry or very high value items like art, even jewelry and diamonds and gold and those kind of very high value movement. And I would also say something that has been overlooked entirely is in the education sector, where the certification and training, you know that now is the era where a lot of MOOCs, a lot of online digital courses have come about, where the most reputed universities are offering the most valuable information for free. So it is the first time that democratization or equalization of education opportunity is coming about, where people in remote countries can also access very exotic courses like cryptocurrencies, for example. So when they have the knowledge, what certifies that they have the knowledge is a separate industry, which is training and skill validation. So those kind of new industries can come about, which would completely utilize blockchain in a way that has not been used in the education sector before. So there are myriad applications like this, which has escaped the attention of a lot of policymakers and also the corporates. For example, yesterday I was in a panel where some media like Fortune and so on, they were asking the blockchain experts, tell us, we are publishing industry, how can we use blockchain? So one of the use cases is, the publishing industry is limited in their ability to deploy journalists or deploy people who can gather media, who can gather information, images, videos at incidents that are happening. So what would come in handy is crowdsourcing of information, crowdsourcing of news, if you will, which the public are very adept at gathering because they happen to be there at the place of the incident. And they also happen to have the images captured. Now there needs to be a platform where the public and these publishing houses need to get together frictionlessly. So blockchain enables all these kind of new economies, new crowdsourcing economies, unlocking new sorts of value that you haven't seen before.
I want to go back to the investment banks, Arifa, because they make money on transactions under the existing model in banking around the world. And so blockchain really would be disruptive for them, because if it's a distributed public ledger, not an insular ledger that's just for the banks, then they don't make transaction fees. So this has got to be pretty scary for them, right?
That's a good observation you make. If you go deep into what's happening in the finance sector, you're right in observing that the banks have a knee-jerk reaction to blockchain in trying to come and forming a consortium, private consortium, or a private alliance, or a coterie of banks. Actually, if you look at the coterie, there is no innovation there. So it's just people joining hands and saying, hey guys, here is a threat, here is a bear we see coming, and we can't deal with it, so let's join hands and let's call it a strong alliance. Maybe the bear gets threatened and goes away. That's not what's about to happen. Sorry, Jamie Dimon. So the banks are trying to reinvent the old systems like SWIFT, for example. What was SWIFT? SWIFT was a messaging and a telecommunication system. And SWIFT was a next generation thing to come about after MasterCard and Visa. What was MasterCard and Visa? That was one of the rare innovations to come about from the banking sector, the plastic invention. And that had a real potential to disrupt and disintermediate banks, but it did not, because who owned MasterCard and Visa? The banks. So the banks again formed together and formed SWIFT so that they can still have profit making within their institutions. And they're currently trying to reinvent the same thing by creating a private blockchain and by having clearing and settlement and payment mechanism there. But that is not going to change anything at all, because what they claim they are going to do with the blockchain, they are already doing anyway. So maybe it results in a faster payment and in quicker payment and getting rid of some correspondent banking, which they're not interested in because they are the correspondent banks. So actually it does not re-architect the process. It does not create anything new. So I would say, if you look at it from outside, the system looks the same. The players within the ecosystem remain the same. It's just updating their old ledger with a new ledger. And it has no impact whatsoever in the financial services architecture. So what is about to happen to the banks is a new sort of a player coming about and creating something which completely does away with this kind of a system and invents a new kind of system which does not need this coterie or alliance of banks at all, which does away with this SWIFT kind of mechanism and creates an entirely different solution. For example, we are trying to come up with a decentralized exchange, a tokenized IPO platform, which can actually replace the existing exchanges. So, which is an alternative, which is a next generation exchange or a marketplace, if you will. So, if I talk to the stock exchanges, I have actually spoken to some of the stock exchanges, they say they have a lot of experience and knowledge in the way the exchanges currently work and where are the pain points and where customers could do with some improvement and so on. But that knowledge and that experience is of no value to me, because my mechanism and my solution is a completely different one, which has not a single entity which exists in their ecosystem. So my solution is completely different. I don't even need to understand what they did before in their existing establishment. So these kind of players who can potentially completely disrupt the existing ecosystems, I predict these players to come about not from the banking industry but from outside. So this is taking a step further from the fintech wave. But I would say the fintech wave failed in disrupting the banking sector because it was complementary, it was supplementary to the banks. So fintech provided interface, a front office or an interaction with the customer, and the bank still served the back office or the balance sheet for the business. So they were still complementary. But the next wave of fintech, which is blockchain, is not going to be complementary. It is going to be very intimidating to the existing banks.
Around the world. She's all blinged up, and I first asked her if companies around the globe viewed blockchain as a hurdle in today's financial world. Here's what she had to say.
If they look at blockchain as updating a ledger, and even if they updated the ledger, it's not going to unleash the real benefits of blockchain. And if they were to really unleash the benefits of blockchain, there would be no place for them. So I say there is a conflict of interest for the existing incumbents to really see the potential of blockchain. So, for example, let's say Hong Kong Stock Exchange. So actually exchanges were the first institutions to wake up to the potential of blockchain. NASDAQ invested about $5 to $10 million way back, even before Ethereum came about. This was in 2014. They invested in a startup called Chain, and several other exchanges is the same story. So they understood the potential of blockchain. They invested in startups which were working on blockchain solutions, particularly for the exchanges. But what they missed was, even after discovering these startups, even after investing in these innovators, what they ended up with is semi kind of exchanges, which is a child exchange. Let's say there's a Hong Kong Stock Exchange, which is the parent. They created a child stock exchange which would target companies which would otherwise fail to qualify for the parent exchange. So they would target smaller size companies which are in the pre-IPO stage, and they would help those companies go public in their child exchange. So you tell me, where is the disruption here? Where is the business model innovation here? What is being done differently, other than just expanding the horizon for the client set?
Arifa, you have mentioned IPOs, initial public offerings, a couple of times. Are you really talking about IPOs, or are you talking about ICOs, the initial coin offerings?
So ICOs are a well-known phenomena, and you understand it.
Mm-hmm.
So you know that more than $5 billion have been raised just in the past year alone, 2017, over 800 ICOs. Now, all these ICOs have been created or launched by companies that have something to do with blockchain. They either have a blockchain innovation application, or they created a token which
somehow related to digital.
Somehow related to blockchain. But I would say this method of fundraising, which has completely disrupted venture capital, at least in the small subset segment that we are looking at, is very attractive to a lot of industries, to a lot of companies in the real economy, who are now watching this ICO craze and looking at it and saying, hey, you know, this is a wonderful idea to bypass the venture capitalists if we could just access the investors around the world in a global borderless platform. Now, how would you do that? They cannot come up with a token, and they cannot come up with a blockchain application. So all we are doing is giving them the platform to issue their traditional securities, whether it is stocks or bonds, on a blockchain platform. So it is similar to ICOs as a mechanism of fundraising, but what is being issued is not the tokens and coins that you have heard and read about. They are real securities. So in the ICOs, a company or an issuer is issuing a crypto key which represents a token. Here, they are issuing a crypto key which represents a security, and it is up to the issuer to define what that security means, whether it is a share which is 1 by 10,000% of the company's net worth, or whether it is a bond which represents 1 by 100th of a real estate property, for example.
As an investment banker in your previous life, you've worked with the Financial Conduct Authority, the FCA in the UK, and other regulators around the world. How are they dealing with blockchain? Is it more than blockchain, of course? It's probably digital currencies, but what are your thoughts in that general area?
Bitcoin and cryptocurrencies, they have completely rattled everybody from economists to governments and so on, and you're seeing the reactions. And some of them, like for example, very authoritative people like Jamie Dimon, who issued statements, have had to retract the statements. So Bitcoin is here to stay, and cryptocurrencies are here to stay. And that is because Bitcoin, as a leader of cryptocurrencies, has lent the rest of the pack of cryptocurrencies a lot of legitimacy because it has survived over a decade of skepticism and assault. You have to remember that the Bitcoin investors are a different creed. They're very different from the traditional investors. They are not looking solely at return on investment. They are not looking at sane parameters or paradigms of assessing investment in the traditional way. They are actually thinking, we are pioneers, we are trailblazers. We are the ones who have espoused this most magnificent cause of cryptocurrency, which is a boon to the world, and they are looking at it as a responsibility onto themselves to actually do something with it to perpetrate even more disruption in the economy. So they look at funding these ICOs and cryptocurrencies as nurturing the next wave of innovation and building the next layers of applications. So it is like helping towards maturing this new economy.
Arifa, we talked about digital currencies just a little bit there, but I want to ask you, look into your crystal ball, go out 10 years, 2028. Which digital currency is it that's sort of a leader? Is it still going to be Bitcoin? Is it Ethereum or Litecoin or Ripple? Or is it one that perhaps isn't even out there yet? Maybe they haven't done their ICO. What's your prognostication?
I can only say with certainty one thing, that it's definitely not Ripple.
Now, why do you say that? I'm curious.
Because
if they strike a deal with Amex, they're going to be all over the world pretty quickly.
They can be, but it has nothing to do with crypto. And it has nothing to do with disruption or innovation. So I believe Ripple is a currency that these banks got together and said, hey guys, we need to put up a strong defense to this onslaught of crypto coming from true disruptors, and we are no less, we are smart cookies and we have a lot of money, so let's buttress this currency of our own. So they created this Ripple, and even people may get carried away with that, with the price rise for a bit, but there's no underlying fundamentals boosting this. And underlying fundamentals is always genius, is always imagination, is always creation of the future, and none of these three appears in these existing.
Well, but I'm going to come back at you.
Sure.
It doesn't necessarily have to be a great business model to have a high valuation. We've seen Dogecoin with up to a $2 billion valuation, now back down to $500 million valuation. There's others out there. So it doesn't necessarily have to be a good business model, right?
Yeah, so you know, there is a place for fads in a fast growing industry, in a nascent industry, which is a blue ocean, right? And people are getting rich and people are getting extremely confident, right? So what does that confidence mean? Confidence means we can throw money at whatever without caring about the returns, without caring about the logic for it. So look at CryptoKitties. So CryptoKitties is an exactly similar paradigm. And I can see a lot of such things coming about. And China is a very good example. Even after the Chinese government has banned it, I have been there for a few talks in Shanghai and Macau and Shenzhen and so on. People are absolutely fascinated. The moment a visionary turns up and they have a good eye for what is a true disruption versus run-of-the-mill ICOs, the moment something truly disruptive comes about, they really have a keen eye and they want to throw money at it. So nothing is stopping them, no ban is stopping them.
Well, the regulators may be telling them they shouldn't be all gung-ho about this.
Yeah, no cautions of legitimacy and nothing is stopping them.
I think, Arifa, a lot of folks, particularly in the States, have sort of a myopic view of India. They look at it as those are where the call centers are, they've got congestion in Mumbai. But it's a lot more than that, a lot more technology, interesting things going on. But specifically with regard to blockchain, tell us about blockchain companies in India.
So you're right in extending that label of myopia to even blockchain in India, because we have been studying and observing the Indian landscape for a few years. I happen to represent Ethereum in India, and I have taken Vitalik Buterin to India since 2016. The first time he came to India, the only applications we saw were Bitcoin exchanges. Not even those exchanges did not even deal in other cryptocurrencies like Ethereum. So it started with Bitcoin exchanges, and there was hardly anybody creating any applications, writing any smart contracts, and there were no capabilities, right? And but India is a huge repertoire of technical talent. We have a huge number of engineers graduating. Perhaps we are the second largest or the largest school of graduates, maybe after China. And we are English-speaking graduates. So we are mathematically extremely well-trained, and the developers are extremely talented. So it doesn't take very much effort or much time for them to get equipped with blockchain. So that is what is happening now. So if we compare 2016 to 17, the unilateral or unidimensional focus on Bitcoin trading and applications to do with Bitcoin has transformed now to building applications on Ethereum, people getting trained in Solidity. We have hosted hackathons there, and we were surprised, even Vitalik was very impressed, that the use cases and applications that were being built were not just related to the financial services, but across the spectrum. So there were logistics, there were supply chain companies, there were financial inclusion applications, there was even a technical payments channel application which impressed Vitalik, and Vitalik ended up giving the prize, the blockchain prize for Vitalik Buterin prize for blockchain excellence.
It's fantastic. Arifa Khan, crypto champion. Thank you so much for being with us. Hope you'll come back again. I know our viewers enjoyed this. It's a pleasure being with you.
I appreciate it. I look forward to it.